Hello, my name's Clare Murray. I'm managing partner of specialist partnership, employment and regulatory firm CM Murray, and I am delighted to welcome you to the next episode in our series on private equity investment in professional services firms, and particularly law firms. It's a really hot topic at the moment. There's a lot of discussion about this, the pros and cons. As I say, this is part of a series, and I am delighted to be joined today by my two fabulous colleagues who are big thought leaders in this space, Corinne Staves and Zulon Begum. Today, we are specifically looking at the impact of private equity investment on law firm governance, what it does, how it works in practice, whether you should be making changes in advance, and if people are going to welcome it. So, Corinne, can you just tell us first, what does current law firm governance look like, just sort of classically, in a firm that doesn't have private equity investment, just so we get a sort of like a benchmark?
I mean, obviously, it depends from firm to firm. Most firms are structured as LLPs. Still, there are some companies, but in an LLP context, it's incredible flexibility to choose how you structure your firm from a governance perspective. Smaller firms, perhaps up to 20 partners or sort of 10 to 20 million in revenue, might have a high degree of partner involvement in decision making. But if you get to a space which is larger than that, then you'll be looking at some kind of governance structure that kind of resembles a board, a company board. So you will have some kind of management committee, executive committee, sometimes it's called a board, that's usually sort of staffed by a number of senior partners within the firm, perhaps some professional business support staff, and then there is a category of decisions typically that are reserved to the partners. So you might, for example, delegate operational decision making to the board, or in some cases a managing partner or a CEO. And then there are a class of fundamental decisions which are reserved to the partners, which might be things like decision to merge, a decision to admit new partners, decision to remove people, those really fundamental things on which the partners still want to have a vote.
And Zulon, in the new world of private equity investment, how is that governance likely to change? What will it look like?
So I think it largely depends on the level of investment that the firm takes on, whether it's majority or minority investment by the PE investor. But I think the overall kind of themes that we typically see when an external investor comes into a law firm is usually around, firstly, kind of the PE investor having certain reserved matters around decision making in the firm, veto rights, especially around decision making around exit for the firm in the future, because we always have to remember that PE investors especially are working on a cycle typically of 3 to 5 years. They're expecting to exit their investment at that stage. So they will bake into any governance arrangements their ability to do that. So typical reserved matters we often see is things around entry into material contracts, mergers, acquisitions or disposals by the firm, admission or expulsion of senior equity partners can often be a reserved matter with veto rights by the private equity investor. And often you also see kind of changes to the firm's constitutional and capital structure. So traditional law firms will often have, full distribution models and may not cater in their governance around equity capital and exit rights. So those will be quite significant changes made to the firm's governance arrangements, because there'll often be a separation between income and capital rights of the partners and the private equity investor, and the private equity investor will particularly be interested in the capital rights and how that is treated on an exit. In terms of other kind of governance changes that we will often see, and when private equity comes into a law firm business, it's around overall kind of the governance structure itself. So participation in the management board. If the firm doesn't currently have delegated decision making, it will often have to change that and introduce delegated decision making to a board, and the private equity investor would normally have a representative on that board. And again, depending on the level of their investment, they may have control of that board in terms of decision making. The other kind of committees that often the investor will be interested in things like are the remuneration committee, because again, the private equity investor will be very interested in how partners are incentivized going forward and how they're appraised and how they're how partners are kind of held to account in terms of their KPIs, which we talked about in our last podcast. So they may have some involvement in the remuneration committee around that. So in terms of kind of the amendments we kind of see to partnership agreements, LLP agreements, it's usually around those reserve matters and kind of governance participation by the private equity investor.
But some really fundamental issues there that go to the heart of the culture of a partnership. And it sounds very much that the more of a fully involved partnership you've been, and maybe that's a smaller practice or maybe a mid-sized practice that is still operating on a kind of a full partnership decision basis, they may struggle culturally a little more than a firm that's actually further along in their governance journey and have actually delegated quite a lot of their decision making to a board, to an executive, that sort of thing. Is that a fair assessment?
I would say that is right. I think a firm that, and to be fair, it's fairly rare to see these now, that where all the partners get around the table and make decisions on everything. Usually there is some level of delegated decision making to a managing partner or some committee. But if there's not, it will be a huge cultural change to move from a very egalitarian model where you may have one partner, one vote, and decision-making rights on pretty much everything, to having to delegate those decisions to a board who may be partially controlled by an external investor. So that is a huge jump in terms of kind of traditional owner-managed dynamics of that kind of very traditional partnership model to becoming externally owned and controlled by an external investor.
Yeah, and I guess that's going to play a really big part, or should be a really significant factor for senior leaders who are looking at the private equity option to decide actually whether their culture and their current model could really withstand it, and whether the partners are likely to get behind it. How can you be sure as law firm leaders, and you might be hanging your credibility, on this private equity peg, how can you be sure that your partners are going to get behind the governance changes and the consequential cultural changes that will flow from private equity investment?
It's a great point, Claire. Really effective law firm leaders will have a really good sense of the mood within the partner body. They will understand what partners like and dislike and how the partners think. So they'll have a really good sense of whether this is a good fit for the partners. I would expect there to be some kind of mandate already for the managing partners or the management committee or whoever the project team is that's exploring a private equity as an option, to have some kind of mandate, albeit a high level, to potentially explore it. So you would hope that there'd already been some kind of high level conversation as a matter of principle about whether this is something the firm is interested in. And one would hope that the leaders would have helped the partners to understand some of the really fundamental things that go with accepting PE investment, and that includes the handing over of some controls, some sort of release of those sort of that governance to those people. I suspect, therefore, that those firms where there is a reluctance in the partner body to relinquish any sort of control or decision making to anyone, and we see this where people are thinking about relinquishing control to management committees, for example, those will be the firms that won't have that same scope to explore the PE options, because it just won't get across the line. And we do see, and Zulon, I know you've seen this too, we do still see some firms where there are decisions which still require unanimity. Sometimes things like changing the constitution, for example, and that means that one single voice can halt progress. And therefore that's why it comes back in those sorts of circumstances to leadership, to culture, to winning the hearts and minds of the partners, so that that technical ability in those sorts of structures for individual partners or small groups of partners block progress and the kind of the implementation of strategy. That's why it comes back to culture. And if partners are not supportive of the idea of change to governance, change to strategy, ambitious growth, then PE is not right for that firm. Or if they're in the minority, that firm is not the right place for that partner on a long-term basis. It's a mismatch there, and it won't be a place where that partner flourishes in the long term, I'm sure, or is happy.
Which brings me to the question about to what extent should be firms, at the point that they've sort of conceptually decided that they want as a partnership to look at external investment, should they also be then looking at their governance to see if there are even certain just tinkering changes that just need to be made at that stage to put them in a position to be able to make these kind of decisions?
Yeah, I think so. I think it's one of the kind of a key things on their to-do list in terms of kind of getting readiness for that external investor, because they may have things in their current LLP agreement that would actually hinder them in taking external investment in the first place. So Corinne's example earlier around having unanimity, if you have a unanimity for selling the business or part of the business, then that again can kind of hinder your ability to take on that investment. So having a kind of a thorough review of your current partnership deed to understand exactly what the decision making is currently and whether that hinders or facilitates your ability to take that external investment. And also looking at it from the eye of that external investor as to when they're doing their due diligence on the firm's governance, are they going to see kind of potential problems rather than things that will facilitate the kind of investment that they're preparing to make? So making yourself kind of ready for that is kind of part of that kind of getting it in readiness alongside kind of getting your finances in order, getting the rest of your house in order, getting your constitution in order is also kind of a part of that process.
I would also mention that if you haven't taken those preparatory steps in terms of being sort of deal ready, there are ways and means of dealing with that as part of the transaction, but it just takes more effort, more planning, because, for example, if you have got a kind of a high voting threshold or unanimity required, then you need to get your decisions really early. You need a really good dissenter strategy. You need to have powers of attorney in place, so you can't have one person absolutely derailing the transaction on the eve of the completion, for example. So there are ways and means of managing those risks, but I think it adds complexity, it adds uncertainty, and that's unlikely to be attractive to a future investor. So to the extent that you can avoid any of that by planning in advance, that's got to be a healthy option.
So we've talked about the partners and kind of retaining talent. To what extent do governance changes affect the ability to retain existing talent and to recruit new talent, whether that's partners or in fact in any aspect of the firm?
I think that it's the same with non-externally backed law firms, in the sense that you have to have a healthy and effective firm to if it's a basket case firm, then people aren't going to want to work for you. So let's assume that you've got good governance in an externally backed firm or a non-externally backed firm, and then I don't think governance alone is what is going to swing a decision for a partner to join the firm in terms of recruiting future generations of talent, but I think it will be one factor. I don't think we hear very often people saying, I'm desperate to be a partner at a firm where I'm both an owner and a manager, and we, the owners, the lawyers, run this firm. You don't hear that very often when you're sort of talking about lateral moves. But governance and decision making and that ability to participate in the governance of the firm can be a factor that people take into account, alongside things like the firm's culture, the compensation arrangements. So I think that we will see people who have an interest in being in PE-backed firms, but they will also have to be on board with the fact that PE has certain decisions reserved to it, and there's a certain amount of relinquishing of control. Some people welcome that, for example. They just want to serve their clients and do their jobs. And if the firm offers them that platform, they don't care who's making the decisions, really. But then they'll also be looking at, do I want a full income distribution model, which I would see in a non-PE firm, or am I excited by this opportunity to participate in the future capital growth of the business and have kind of shares, for example, in the growth and participate in exits and so on and so forth. So I think governance might be one factor that influences decisions on partner moves and whether people stay in firms, but I don't think it'll be the only one.
So do you each have a top tip that you would give to a senior leadership team of a law firm that is considering, as part of their long-term strategy, private equity investment?
I probably have two top tips, which have already kind of been mentioned, I think. So firstly, kind of management having effectively their finger on the pulse of their partners, understanding what is their appetite for something like this, because it is quite significant in terms of kind of governance changes, as well as kind of changes to the whole financial model of the firm, and doing your kind of advanced prep in advance around your governance that we mentioned earlier around does your current constitutional arrangements help you in doing this kind of very fundamental transaction like this, or will it hold you back? Do you need to make changes in advance to help you get through it? So don't leave it to the last minute, because then that can completely derail any transaction that you might have on the table.
I would just encourage law firm leaders to step back and to keep that sort of high level view. What is it that the firm is trying to achieve here? And governance is again one factor here. What are you as a firm trying to achieve by pursuing or considering PE investment? What is your overall strategy? What are your aims? What are your goals? And therefore, and everything to do with the firm's development, whether it's accepting external investment or anything else, you should keep coming back to what's our strategy, what are we trying to achieve, how is this step going to help us further those commercial objectives that we've agreed upon. So I guess the same would apply to governance. Do these governance changes enhance, improve, help us achieve those commercial objectives? And if they don't, or it's not clear, then why are we even thinking about them?
Thank you so much, Zulon and Corinne. Really appreciate that. Really, really interesting. And thank you so much for watching this discussion to the end. Really appreciate it. I hope you've enjoyed it. If you are interested in all things private equity investment in professional services, we'd love to hear from you. Zulon and Corinne think and talk and advise on these issues all the time. So they'd be very happy to discuss any issues that you might have. So thank you again, and hope to see you again soon. Take care. Bye.